Options can be an amazing tool and can be used in so many different ways. Now, since there are a ton of different strategies out there and ways to use them, options can be a little bit confusing when you're first getting started. I'm definitely not going to make you an expert in a single video, but today we will go over a quick introduction to what options are, a few of the most popular strategies out there, and how to actually trade them within Tastyworks. Also, before we get started, consider using my affiliate link down below if you do decide to open a Tastyworks account for yourself. But to begin with, what even are options? Options are simply a contract giving you the right to buy or sell a stock at a set price for a set amount of time. There are going to be call options, which give us the right to buy the stock at a set price, and also put options, which give us the right to sell the stock at a set price. Now, those contracts can be traded just like stocks, so we can buy them right now and sell them 5 minutes later if we wanted to, and they will be constantly changing in value just like stock. Now, generally, you'll never actually want to exercise the contract, meaning you don't ever actually want to buy or sell the stock itself, but rather buy and sell the contract itself. You'll also need to remember that each option contract represents 100 shares of stock. So when you see an option trading for $2, it's really going to cost you $200 to buy it. They're also going to move differently than stock because they're affected by things like time, volatility, or even interest rates changing. So that means eventually, once you know what you're doing, you can use them to not only bet on the stock price changing, but also trade time or volatility. But learning all the different strategies and how to use them is going to be a journey in and of itself, and it's going to take some time to learn. So before we jump into that, let's actually learn how to trade them within Tastyworks. To do that, you'll generally be doing so right from the option chain, which can be found by heading up here to the Trade tab. Then looking over here on the right, we can actually see our option chain. And then up here at the top, we can see the stock that we're looking at right now. So at the moment, because we are looking at American Airlines, the option chain below is an American Airlines option chain. Heading back down here and taking a closer look at the chain itself, the very first thing you'll need to decide is what expiration you actually want to trade. Basically, how long do you want this option to be active for? Here on the left-hand side, we can actually see all of the options expirations available for American Airlines. So here we can see the November 4th expiration, we can see the November 11th, and we can see it goes all the way out to the January 17th expiration of 2025. To the right of each of those expirations, right here in the center column, we can actually see how far out that actually is. So how many days until expiration? So November 4th is 1 day from now, November 11th is 8 days from now, and so on. I think you get the idea. The last thing I'll mention before we actually open up one of these expirations is over here on the far right-hand side, we can also see the implied volatility for each of these expirations. And we're not going to dig into it too much today, but it is an incredibly important metric to keep your eye on, and it'll give you a rough idea on how expensive these options could be. But just looking here at all these expirations, we've got a lot of choices to choose from. Now, unfortunately, I can't really tell you exactly which option expiration to choose or how far out in time you should typically go, since it'll really depend on your strategy. Although I will mention that if you choose to pick an option close to expiration, you can expect to see a lot of volatility. Those options that are set to expire within the week, and especially those that expire the same day, can swing pretty wildly in price, which can be great if it's in your favor, but not so fun if it goes against you. If we instead choose to go further out in time, we will be spending more money up front, but we'll also see far less volatile swings in the option contract, and we're going to be far less affected by things like time. But like I said before, there just isn't a one-size-fits-all answer to what option expiration is best. It is really going to depend on the strategy we're trying to do and what we think is going to happen next. But since we need to move forward with this example, let's just go ahead and say, for example's sake, that we typically like to trade options that expire around 30 days out. In that case, looking at all the available options expirations, it looks like the closest one out is going to be December 2nd. So right here, I can see December 2nd is 29 days from now, and then in order to expand that, I simply need to click on it. That'll then open up the option chain right below, and then down the center of the screen, we can see a few of the available strike prices for that expiration. So beginning right here, we can see it starts at the $11.50 strike and then goes all the way out to the $15 strike. Just keep in mind that the strike is simply the price that you're getting the right to buy or sell the stock for until December 2nd. If you wanted to see a few more available strikes and maybe go further out of the money, we could do that by coming up here to the top right-hand corner where it currently says strikes 8 and either type in that box how many strikes we want to see, or just click on the drop-down menu and then select in the list below. In this case, I'm just going to come up here to the top and go ahead and type in, let's say 14 strikes, and go ahead and hit enter on the keyboard. Coming back down to the option chain, we can see a few more available strikes have been added. So right here it now begins at the $10.50 strike, and looking down below it goes all the way out to the $17 strike. You may have also noticed that on the chain itself, the in-the-money options and the out-of-the-money options are going to be separated with this orange horizontal bar going down the center of the screen. At the top, you can also see all of the info columns displaying things like the current delta, the out-of-the-money percentage, and the current bid and ask, which is essentially just what we can buy or sell this option for right now. In order for us to change those informational columns, we would simply come up to the column we want to adjust. So in this case, let's pretend I wanted to change the out-of-the-money percent column. I'm simply going to go ahead and click on it. That'll then open up a menu of all of the other columns I could add if I wanted to. And in this case, we'll just come up here and add the volume column. Looking down below at a few of the available strikes here, we can now see the Greek delta for each individual option strike, as well as the number of contracts being traded so far today. But now that we all have a general idea of what it is we're actually looking at here and how to customize it a bit, placing the trades themselves is pretty straightforward. We'll simply need to come over here to the option strike that we want to buy, and whenever we want to buy, we're going to click on the current asking price. Whenever we want to sell, we're going to click on the current bid price. So as an example, let's say we were bullish. We think American Airlines stock is going up. One strategy that could make sense is buying a long call option. So looking at all the available calls over here on the left-hand side, let's say that we wanted to get one a bit out of the money. And in this case, let's say we wanted to get one with a delta of roughly 30. In that case, looking right here at the $15 call, it looks like it currently has a delta of 29, which is about as close as I'm going to get. And right here, we can see the current bid ask is 32 cents by 34 cents. Keeping in mind that an option contract represents 100 shares of stock, each one of these contracts is going to cost us about $34. Since we do in fact want to buy it, we are simply going to come down here and click on the current asking price of 34 cents. That'll immediately highlight the option contract in green, making it clear we're about to buy it. And then down here below, we can actually see the order ticket to buy that contract as well. Right here, we'll now be able to specify exactly how many contracts we want to buy, the price we want to pay for it, and the order type that we want to use. Starting out with the very first box over here on the left, the quantity box, let's first start by specifying I want to actually buy 2 contracts right now. So I'm going to go ahead and change that from 1 to 2. Coming over here to the right, I can now specify exactly what I'm willing to pay for this contract. In this case, let's say I only wanted to buy these 2 contracts if I can get them for 25 cents or better. So I'm going to go ahead and highlight that and type in 25. Coming a little bit further to the right, we could also specify the order type that we wanted to use. And in this case, I'm currently using a limit order, meaning I am specifying a price. If I wanted to adjust that, I could click on it. And there we can see other order types like a market order, a stop market order, and a stop limit order. I generally wouldn't recommend you ever use a market order on an option contract, but a market order basically says you'll take whatever the current price is, you just want to get those contracts right now. The other 2 down here, the stop market and stop limit, those are generally going to be used as a form of protection to exit your position before you lose too much money. So normally you're going to use them as a closing trade, not as an opening trade. But for now, we're just going to go ahead and stick with a limit order. And again, I'm saying I only want to buy these contracts if I can get them for 25 cents or better, which is really $25 or better. Now finally, the very last thing I could do is come over here to the far right-hand side, and I could also adjust the time in force. Basically, how long do I want this order good for? At the moment, with a day order selected, it means this order is only going to work from 9:30 a.m. to 4 p.m. Eastern Time. And if I don't buy these contracts by 4 p.m., the order's just going to cancel itself. If I were to instead click on that, I could flip it over to GTC, which just stands for Good Until Canceled, meaning it's going to go out every single day until it fills or until I come in here and cancel it. And then the very last one here in the list would be used if you wanted it good till a very specific date. But for right now, we're going to come up here and specify GTC. And that's essentially it. But before we hit send and actually place the trade, if we were to look directly above the order ticket, you're going to see a bunch of helpful info right up here. So from left to right, it's going to tell us our probability of profit, the extrinsic value left in these contracts, the probability of us getting at least 50% profit at some point during this trade, which doesn't really apply to a long option in this case, the current delta of the trade, the current theta, the max profit, max loss, and then how much buying power we need to actually do this trade. Now, you really don't need to understand all of this right this second, but later down the line, this is going to be pretty useful to actually figure out what it is you're about to do with this trade. But for now, we'll just say we're happy with it. And now in order to actually submit the trade, we're going to come down here to the lower right-hand corner and hit review and send. We can then double check our order confirmation just to make sure everything looks right. And since it does, we'll just come down here and hit send order one more time. Now that the order has been placed and it's working, we can go ahead and check on it by coming back up here to the positions page. And then looking over here on the right-hand side, we can see our working order right here to buy those 2 contracts at 25 cents or better. Later down the line, if we changed our mind and we needed to cancel this order or modify it in some way, we could simply come down here below and right-click on the order itself. Then within that little pop-up window, we could either hit cancel order to just outright cancel it, or replace order if we wanted to modify it in some way. I'm just going to go ahead and cancel it for right now by just clicking cancel order here. And now that that's done, if we wanted to go through another example and quickly go over how to buy a put option, we'll simply need to come back over here to the trade page. Coming over here to the right, we'll go ahead and stick with the same option expiration as before. And this time, since we're looking at buying a put option, this would be a bearish trade. We're now saying we think American Airlines is going to go down in value. Taking a closer look at these puts, let's say we wanted to buy a pretty far out of the money put option and we wanted to get around, 5, 6, 7 delta, something like that. Here we can see the closest representation of that right here is going to be a delta of 6, and that looks like it's going to be the $10.50 put. If we were to come over here and take a look at the current bid ask, which is again just telling us what this option is currently trading for, we can see it's currently trading for 7 cents by 8 cents. Now, since we do want to buy this put option, because now we're bearish on American Airlines, we think it's going down, we are simply going to need to click on the current asking price of 8 cents. Just like in the previous example, we can see that put option is now highlighted in green up here. And then down here below, we can actually see the order ticket to buy that put. For this one, I'm going to go ahead and leave it set to 1 contract. I'm going to come over here and actually I'll leave it as the current asking price because let's say I actually wanted to buy this one right now. And then all I have to do is come over here to the word limit. I'm going to leave it set as a limit order, and I'm even going to leave it just good for the day. And if I look up here at this top line, we can see if I am perfectly right in the best case scenario, I could make $1,042 on this trade. And if I am completely wrong, the most I could ever lose is going to be $8. Since that looks good and I'm happy with it, I am just going to come down here below and hit review and send. Just confirm everything looks right, I'm happy with it, and now in order to place this trade, I am just going to hit send order. Now that the order has been placed, I can actually see the order already filled as well, and I can see that by coming up here, and now the option contract kind of has a white box around it, and then right here it says I've got 1 contract. I could have also seen that by coming over here to the positions page, then coming over here to the right and clicking on my American Airlines position. And then down here below is that put option I currently hold. So here it says I currently have it at 8 cents a contract. And then over here on the right, it would tell me if I'm currently up or down since buying it. But remember, just because this option expires on December 2nd doesn't mean I have to hold this option to December 2nd, because that's almost 30 days from now. Let's say a couple days have passed and now this option contract is currently trading for $10 or 10 cents. Now, if I bought it originally for 8 cents, and now it's currently trading for 10 cents, that would mean I'm up currently 2 cents a contract, or I'm up currently $2. In that case, I am happy with that $2 of profit, so now I just want to sell this contract. So in order to do that, I am simply going to come over here and right-click on the option. Then I'm going to come over here to the right and click on Close Position. That'll immediately take me back to the trade page, and now I can see my order ticket to close out of this put option right down here below. Now, of course, this option isn't really trading for 10 cents. The current bid price, or the price I know I can sell it for right now, is only 7 cents. But if I only wanted to sell it if it went up to 10, I would just highlight this, go ahead and type in 10 cents here. And now that I'm happy with that, in order to actually submit it, we'll just come over here and hit review and hit send order. So now that my order has been placed, if I were to come back over here to the positions page, right here it's telling me I've got one of the $10.50 puts but I also have a working order to sell that exact same put if it ever goes up to 10 cents a contract. But those two examples are pretty much the most basic possible thing you can do with options. Buying calls if you think it's going up, buying puts if you think it's going down. At some point, you're probably going to want to learn about things like income strategies, like covered calls or cash secured puts. Or at some point, you might want to learn about more complex trades like vertical spreads or iron condors or butterflies. And really, those are just a couple of the types of strategies that are out there, and they can be used in so many different ways. The two main buckets that you'll eventually want to learn about are going to be long strategies and short strategies. The long option strategies are generally going to be directional in some way, meaning that you need the stock to move in one way or the other to actually make money. The short bucket, on the other hand, the one where you're selling option premium, is generally much more neutral. So instead of trying to make money if the stock goes up or down, you're instead trying to make money from time decay or volatility decreasing. But that's a little bit too advanced for a beginner level video, so I'm going to go ahead and save that for some later videos, so be sure to follow the channel if you want to learn more. Hopefully after all that you feel at least a little bit more comfortable with how to trade options on Tastyworks. It'll definitely take a little bit of practice to get the hang of it, but it's definitely worth it in the long run. I have made a bunch of videos on options, so if you're looking to learn more, check out those videos next and I will continue to make more going forward. But that's it for today. Have a great rest of your week and I'll catch y'all on the next one.